Boom, ladies and gentlemen. The acid capitalist. It is I. It is Windy. It is Hugh Hendry. I'm at the ghetto. I'm in St. Bart's. And you know, I'm feeling good. Having a wonderful time. You wouldn't think so, because this is a bit of a Grinch piece, but let's have a go. You see, I didn't write this. I didn't write this paper to explain the market. I wrote it because I've lived a long time, and I've lived inside this thing long enough to know what it isn't. You see, for decades, I've sat at the crossroads with the macro narrative where it gets made. And I've watched a lot of numbers hit the Bloomberg screen. Quite frankly, I've watched grown men attach meaning to nothing. I've watched careers built on sounding certain about things that just are not. Me, I feel like the drone, what's it called? The robot in Blade Runner 1 at the end. I've seen the moons of Orion back on planet Earth. I've watched phantom cycles come and go. I've seen confidence rise and confidence fall. But one thing never changes, and that's the market's need to pretend. So you see, this is not a forecasting guide. It's a rejection of the idea that Wall Street forecasting works. Far from it. Now, call it a rant if you want. Call me a spook. I mean, call me whatever you want. I don't care. But if you do listen closely, God, I've got traffic past. If you do listen closely, this is a macro. I think this is a macro teach in. It's a trader's way of seeing. This is not meant to rhyme. Because markets don't move because somebody's figured them out. They move because people act, react, and they misprice risk. Inside a system that's way more chaotic than anyone cares to admit. And you know, the closer you stand to the noise, the more convincing the illusion it actually becomes. So believe me, when I say distance is clarity. So what am I saying? Do not use this as a script. Use it as a kind of form of filter. What do I mean by that? It's a damn good question. I mean, let me think. This is a head scratcher. When you hear certainty, question it. When you see importance attached to decimal fucking points, step back. When they tell you something matters, ask, well, what actually moved? You know that dial? What moved? Ask, but ask the only question that really counts. Did bond prices change materially? Miss, I've got a question. Because if they didn't, nothing happened. I learned that the hard way. So you don't have to. Okay, so much for who does prefaces in podcasts? Let's start. Let's get rowdy. Let's do some vulgarity. Because I want to say, fuck this never-ending macro circus. You see, I step away long enough to melt my brain. I do it once a year for my B-day, my birthday. I'm not going to talk about my birthday again. And I come back expecting revelation. And I've got to say, more fool me, because nothing fucking changes. It's the same traveling theatre of, I call it banality. It's the same well-paid organ grinders, the same numbers stitched together in a haphazard manner and sold as meaning, when nothing changes except the narration and the clowns narrating it. And you know what? I feel cheap and bloody stupid for having expected anything else. So let's start with last week. God knows when last week was. Oh yeah, last week started on my birthday, Monday the 16th. The street. The goons insist on calling it a really fucking important week. You see, we had the Federal Open Markets Committee. We had the bosses, the high disciples of the financial system, the governors of the Federal Reserve, and they met last Wednesday. I was none the wiser, but they left rates unchanged at kind of, let's call it 3.8%. That would be the mid-range. It was fully telegraphed. It was fully staged. Now, what they did was like, that's a great idea. It's all about growth and inflation. You want less inflation and more growth. There's a million definitions of inflation. The Fed, they love this thing called the P, the C, the E, the Peter, the Charlie, the Eddie. I've given up. Even price composite, I don't know. I'm sure you know better than me. Anyway, shock, horror. So we want inflation down, we want growth up. Well, they increased their forecast for inflation from 2.4 to 2.7. Shock, horror. But to avail, if you will, the sense of shock and horror, they lifted their expectation for how fast the American economy, we call that GDP, gross domestic product, they now think is going to grow a bit faster. They had originally thought 2.3, and now they're thinking 2.4. And that's it. That's it. That's the entire event. This really important event. That's it. Dressed up as insight. They call this signal. I call them wankers. The translation is not complicated. In real life, inflation is, it's not under control. And growth, you know what? It's not collapsing. Everything is not under control. And the growth is just upsy downsy, comme ci, comme ça, as my French friends say. The data is drifting. It's like my life. I'm sure it's a bit like your life. It's messy at times. It's chaotic. It's a weather system. It's the ocean currents shaped by forces nobody in the room can properly model or consistently model. And yet they stand there in their expensive suits with their forecasts like medieval priests reading smoke circles, insisting they can see the future when they can't. When nobody fucking can. Maybe just I get a glimpse of it sometimes. And that's the only honest statement in macro. I mean, not he's seeing the future. The only honest statement is nobody fucking can see the future. You got to design A time machine, perhaps. Maybe the Chinese will. Now, as I hear my French neighbours garble something in French, are they saying 14? 14 is the French number for 14. 1-4. 14 basis points. Remember that. What am I talking about? Well, you see, after the event of last week, the Federal Reserve meeting, and how they changed, it's like the cardinals voting for a new pope. The white smoke showed that GDP estimates had marginally been increased, and inflation estimates had taken a bit of a larger increase to the upside. The net of all that was the US 10-year government bond yield. It drifted. That's my word, drifted. It's not their word. It moved from roughly 4.25% to 4.39. Oh my God, I'm quoting numbers to 2 decimal points. This is what happens when you stare at your screen. Anyway, I had to use the 2 decimal points because that movement is 14, that number again, 14 basis points. 14. Do you know what? Do you know what a basis point is? Anyone? It's 1/100th of 1%. So we're talking about 14 1/100ths of 1%. I call that an eyelash. I call that a rounding error. Something you would ignore in any real enterprise where actual capital was at risk, where grown-ups were in charge. But in this Disney Matrix world, they inflate one eyelash into a revelation. Grown men, not in mouse ears, but maybe they do have mouse ears, in expensive suits, they lower their voice solemnly and they talk about repricing the rate path as if 14 fucking basis points carries philosophical weight. Bananas! It doesn't. It's triviality dressed up as importance. I don't know. This is the trick, not the move. It's how you narrate the move. And the smaller, and this was really a very small move, the more theatrical the explanation, because the system quite simply cannot admit that nothing happened. If nothing happened, there's nothing to sell, there's nothing to trade, there's nothing to justify the salaries and the bonuses of the guys in the suits. And so they take noise. It's like a can, they take noise and they elevate it into signal because they have to. Now, I see it. I see what they're doing. I see the trickery, their sleight of hand. And believe me, once you see it, oh my God, you can't unsee it. And this is the scam. Thankfully, chaos, my good friend, chaos doesn't obey. What am I talking about? So there was another inflation data point. The PPI, the Producer Price Index. And so this is the rate of change in prices in intermediate goods, like in manufactured goods, like before they transition into final goods, before they're on your shelf in the supermarket. And the Producer Price Index, well, the headline figure, prices, again, remember, this is before they hit your supermarket, rose 2.8%. Now, if you strip out things that move a lot, kind of a bit crazy, like food prices maybe, the core was 2.6, up 2.6%. And if you just zoom into goods, so goods not services, it was 3.1%. And again, remember, the lesson here is is not necessarily the number, but it's the behavior of the system. The more chaotic it becomes, that's what you look out for. You see, you zoom in on the tide in this turbulence, its eddies, its unpredictability is apparent. You zoom out and it appears smooth. And macro is no different. You mirror, mirror on the wall. If you ask mirror, mirror on the wall, who's the prettiest? Who's the smartest of them all? If you ask it every damn second of the day, it's going to say, yes, no, you, or some other person. Yes, no, 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 yes, yes, yes. No signal. If you ask it once a year, it's going to say yes. Or it depends on the person. It might say no. But do you see what I mean? Zoom out and it appears smooth. Smooth like a signal. But of course, my dear friends on Wall Street, they stare at the damn thing. They stare at it tick by tick by tick. I mean, I look at it, still haven't done that chart exercise, haven't published it. We looked at the 500 companies that comprise the Standard and Poor's 500. And we looked at quarterly data stretching back in some instances to the early 1970s. I think we were looking at it. We're looking at a lot of data. These people are tick, 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 like every nanosecond. Decimal by decimal. 2 standard deviation by 2 standard deviation. And then they're surprised that their system refuses to obey linear models. Of course it refuses. Reality doesn't glide. It doesn't converge. Doesn't converge neatly to targets defined in Wall Street's lush and plush. Doing a lot of onomatopoeia, I believe. Does it converge to targets conceived of in conference rooms, in investment banks? Nah, instead it goes, fuck you, Jimmy. To school. Do you hear the wind? I don't know if you hear that. Data, it lurches, it bites, it scratches, it damn ignores them all. I love the data. And because they can't accept that they are actually, in the scheme of things, they don't matter. They are insignificant. But because they can't call that, they resort to metaphor. I swear to God, I think it was CNBC. And the saying was, it's another, what was it? It's another brick in the sticky inflation wall. Makes me angry. I mean, what the hell? Can you tell me, please, what the hell is a tricky brick? A tricky, not a sticky brick. Is it wet? Is it alive? Is it climbing something? And seriously, are they? No. Are they fucking with Pink Floyd? I mean, this is what passes for analysis. A child's really bad metaphor, standing in for some diligent macro understanding. Because if you need bad fucking poetry to explain your data, you just don't understand your data. Now, the next section, which takes us to China, is entitled, Just Show Me, not the money. It's kind of the same thing. Show me the yield. Let me explain. China had a big day. This is Thursday going into Friday. Monday of this week. The week after my birthday. China reported industrial production year over year up 5.1%. Retail sales, year over year, up 4.2%. Fixed asset investment, year over year, up 4.1%. All labeled as beats. And instantly, the narrative machine, it flips. China is back. China's stimulus is working. And commodities, they were bid. People were buying them. They were up on the day. Except I've got one rule which is very pertinent here. And thankfully, like all my rules, it's very simple, childlike in its simplicity. And the rule is, show me the yield. Show me the fucking money. Forgive my vulgarity. The Straits of Hormuz with oil at $100 a barrel. If their 10-year government bond yield, if it's still sitting below 2%, nobody with any ounce of intelligence believes the story. The Chinese system is still trapped in deflationary sludge. They're trudging through sludge. Wilfred Owen from the First World War. I'm talking about China is dealing with deflationary sludge, but they're dressing it up as growth. How do I know that? I'm actually looking at a chart. Maybe, will I share it with you? Will I won't? Will I won't? You know, about a year ago, the authorities, like commies over there, they started lobbing like juicy bombs at the tape and the screens of Bloomberg, saying, "Hey, over here, over here! Like, we get it. We're sorry. We want our asset prices to go up, and we're going to do everything. We're going to stimulate." And they had to do something because the 10-year Chinese bond yield, I think, got down to about 1.6%. And it was vying with Japan. Japan, it's not a good indicator. It's the lowest 10-year yields. So since then, they've stopped the price of their government bonds going up because they don't like the price is being bid up because risk takers globally and within China terrified. Property prices, everything's overvalued, so much leverage, very lots of jobs, very little profit in the system. A stock market which has done nothing in like this century. And the credibility of this then really is what happens next with the 10-year treasury yield. And what I can tell you is it's kind of yo-yoed. Can I say, is yaw a word? Yo-yoed, I think I want to say. Kind of 155 low, like 190, 1.9% high yield. 160 low yield. 190 high yield, but less than 2%. And my point, when the GDP, retail sales, fixed asset investment up 4 or 5%, I'm like, I'm falling asleep. I'm like, you know what, guys, call me when the yield trades through 2%. Kind of easy, right? But until then, it's all Jack and Nori. You're telling me a story. It's state. It's commie propaganda. I got nothing to do with propaganda. Am I going existential when I say decay doesn't scream? Maybe. What I'm digging at is that the rest of this week was kind of, and the week before it was like filler. pretending to be substance. It's like that orange tangerine you get in your stocking that you hang over the Christmas fire. It's like, it's a sweet tangerine, but you're waiting for the big deal. Tangerines and the data we got weren't really the big deal. We got Empire State, which is kind of industrial activity within the New York state. It was weak. We got ADP, which is it's a private sector indicator on labor market employment, and it's a little bit floppish, a little bit soft. Housing data was fragile. It was okay, but it was fragile. And the unemployment claims were steady. Nothing broke. Nothing healed. The system just kind of lingered. And this is the point. This is the danger point where most people lose their footing, because we all want resolution. We want a crash, a boom. We want a reason to turn the page. Something clean, a clean kill. I always give me a clean kill. Give me the S&P or NASDAQ down 20, 25%, and then we'll buy it and it'll make new highs. And of course, what we get instead with life is a mess. Inflation kind of hanging around as if you just farted. Growth kind of like leaking energy. Certainly no regime shift. That'd be a kill. Just a slow daily grind that defies the narrative, but sustains the illusion that the story still matters when it doesn't. Soft landing. It's not a forecast. It's a product that's sold to you. It's something they keep selling to you because they have to. It's expensive running a Wall Street bank. Same with disinflation is on autopilot. That's not the Microsoft AI. That's just like disinflation is coming down predictably. That's a fantasy. Prices do not drift obediently back to 2% targets. They are mad. Like boom, 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 or boom. Did I just make funny noises that were indicating the direction of travel for inflation? Maybe. The noises or these stories that Wall Street tells to grown men, of course, they were never real. They just, do you know what? They sounded good in a research note. Everyone went, we can make money on that. With the first call, the best call, the last call, just don't call. And what gets me angry is these people take a chaotic system. I like my life is chaotic. I like that. And they convince themselves that that word is predictable. Like weather forecasts, like occasionally they'll be accurate, and then they're like, we control the weather. They're not scientists. They're believers. Well, I mean, there was a lot of data. We got purchasing manager indices for manufacturing. 50. I'm not doing a decimal point. 52. Services, 51. The composite was 51. Do you notice the commonality across those three? They were all above 50. So the surface, the narrative, again, the story remains intact. Why? Because when you go below 50, it's an indicator of contraction. Nothing contracted. Close, but nothing contracted. Services slowing, demand weakening. And these are kind of observations you can draw from that data. Employment actually fell for the first time in over a year. It was kind of like a red flag. Costs are rising. Did anyone say the Straits of Hormuz? Prices are rising. Did anyone say Iran's ballistic ballistic missile emissions are down 90%, maybe, but oil prices are rising. Confidence has been fading a very long time. It's called singularity. We're all either going to die or we're going to lose our jobs. Of course, that really doesn't sound like economic strength. It sounds more like a system kind of losing momentum, but definitely refusing to kind of face plant and collapse. To that point, the Q1 fast tracking GDP is looking at that it's going to come in 1 to 1.3. Same story. Not enough weakness to trigger a panic, not enough strength to justify being wildly bullish. Just enough to keep everyone stuck in the middle. I'm stuck in the middle with you. I've got your jokers to the left of me. I've got idiots to the right. And the farce completes itself. I think it was Tuesday. Durable goods. Durable goods didn't even bother to show up. Postponed. Even the data is embarrassed. It can't be bothered to attend its own performance travesty, if you will. It's like durable goods are like, I can't bear, please don't measure me with 2 decimal points. Instead, again, we got fluff. We got import prices, they were up 1.3. We got export prices, they were up 1.5. 1.5. Actually, trade inflation, the pressure, quietly building, but 1.3, 1.5. These are way below headline inflation. We did get the current account. Yeah, so that's principally it's trade flows and then capital flows, typically offsetting capital flows. And the deficit, America's ran a deficit since they came off the gold standard in 1970. This deficit was small. It was as small as it was during COVID, the twilight years of COVID, but like when we stopped trading, the deficit, of course, would become very small. So, and yet, but markets, by this point, markets were like mean, like barely moving. This shit doesn't resolve anything, just adds more inputs into a machine. It's meant to be a weighing machine, but it exists really to produce motion, not truth. Data, economic data, macro data. Are you listening? Have you fallen asleep? It's okay. I think I'm falling asleep. I'm going to bed. Macro data in the hands of Wall Street. It exists to keep asset prices moving up, down, up, down, up, down, up, down. The suits get paid transforming this noise into storytelling, storytelling into fees. It's like Hollywood. That's why we need kids with guns. I've been playing that. Oh my God. Pete Honey, wonderful friend, artist in residence in Wynwood. I was in Miami. And Pete picked me up and some friends Sunday night, came out of an Uber black SUV. And we jumped into it's like a golf cart which has been transformed into a ladybug or a love bug. It's got these big, translucent, lit up wings. And Pete plays really good music and he drives really, really fast. And I smiled. I smiled a lot. Why am I telling you that? Kids with guns. The kids, I don't know, like in your 30s, and you own nothing, you're the disenfranchised, struggling to get it, um, to get an edge or a ledge, to own something. to build wealth. You've got no claim on the economic system that's supposedly all these data points are coming from. And yet, as you know, the consumer confidence sentiment, which is not high. And it's because AI is coming for your job, your career, your sense of meaning. So imagine, and this is for my rage, imagine that's kind of this inevitability almost. And yet you've got well-paid financial clowns debating decimal points, not even hundreds of 1% points, as though this is where the future is decided. What can I say to you? That is fucking criminal. And when any market breaks, because systems built on this kind of abstraction, they break higher, lower. I really don't think it matters. But the same people who construct this fantasy, who just defend this nonsense, they'll be bailed out. But not the kids. The kids will get the bill in the future. They always do. Disenfranchised kids need guns. We were playing, that's what I was talking about, Pete Tunick. One of my favorite songs is it Paper Planes, Flying Paper Planes? MIA. It has this great sequence where it has explosive guns. Enough about guns. Anyway, this is why I refuse to play along with the charade, with this invented hierarchy of importance. No move, my friends. No price move, no meaning. People will tell you the Fed matters, that their forecasts matter, that their revisions, the PCE revision from last Wednesday, that matters. Why would I grant authority to an institution that has spent years being consistently wrong about the thing it claims to control? It doesn't. They don't control inflation. They describe it after the fact. They describe it badly. And they revise their descriptions as reality. Forces them to. That's why I watch price. I don't outsource my judgment to bureaucrats. Bureaucrats guessing with less vulgar vocabulary than yours truly. So the same applies to the PCE indicator. That I'm talking to you on is Thursday night. And in the morning, we're going to get PCE. And when you're listening to this, you'll know what's happened. Was it 0.2 versus 0.3? Do second decimal points matter? I'm not listening. I'm sleeping in tomorrow. Because unless the PCE moves the only thing that matters, unless it moves the price of the treasuries, unless it takes the 10-year yield to 4.5, something would be broken or on the way to being broken. Or if they take it to 4%, the 10-year yield, then something for sure has changed. Below 4.9, I'd be buying the treasuries. 4.54, that's signal. Everything else is farce. Commentary layered on noise. So there you go, folks. That's the acid rule. No move in treasuries, no meaning in the macro data. And that's why the street, that's why Bloomberg, that's why CNBC, they hate people like me. Because I don't need their narrative. I don't need their calendars. I don't need their permission to decide what matters. Me, and I hope you, we watch price. We watch behavior. And we ignore the rest. Hugh Hendry, I've very much enjoyed speaking to you. I am the acid capitalist. I've slept 20 hours, but I had such a great weekend in Miami. But I will not play Wall Street's crooked game. I'm kissing, I'm saying bisous. I was thinking, what music am I going to play out? But I found such great, beautiful music. Do we play the acid capitalist? Or do we play, I've got this great song with my son narrating. I'm playing bass badly, but it's kind of meant to be bad. And I've got the old intern, the young Gabe. Gabe's playing really nice electric guitar. Maybe we'll end with that. Anyway, good night, my friends.
I'm not smoking with nobody tonight because I'm pissed off all my friends. And I don't see it well. I got a foggy lens. I don't see too well through my foggy lens. Spends all my money. Take my tequila, roll. I don't get no money. Met me that night and she spent all my money. I was feeling kinda funny. I was feeling silly. She played with my way. I was like, oh shit, my God. She drugs, loves and spice, and that girl, she was posh, and I really wanna get at the tonight, and I really did need little too much wine, and I really did want to turn off the light, cause there's monsters under my bed, all there's monsters under my bed, there's some shit weed, there's a little bit of lead inside of it, there's been a homicide in the rain, but we still not gonna leave the place, cause it's poppin'. The band has got a knife, the band is freaking out, let's run for your life. The band, they're not nice, the band, they got a knife, better run for your life. I'm not paying nice and rise. I got a little slice of ocean this, boys got cells, ocean this, nice one with, oh shit, it's cold, need a beer and a beer just to cover up the face. And I really think it's saying good stuff, I think be laced, and I really wanted to undo the lace on a nature ray. Oh my god, what did you even just say? Are you speaking Chinese? And you know what they done did? They went to Africa and they built a fucking dam. Now what the hell? Take down a dam. We're not fans of the dam. We're not fans of the dam. I smoke weed in Amsterdam. I smoke weed in London. I do coke in Paris. I wound up on my Harris and I really got embarrassed. But hey, it's okay. I'm feeling like I'm out of Harris. I'm running with my friends, presidential. I don't know, but I know that it's essential. I've been reading some shit that's essential. I've been saying some things that's tangential. I've been going so rough, it's not gentle. I've been